Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So now on euro currency, mostly I would say that everything stands in the proper places on the daily chart. So it seems that I was suspicious on some bullish patterns that were formed recently are correct, and indeed, as I said yesterday, I do not like the performance of the market on the intraday charts. It looks really heavy and weak, and it absolutely doesn't inspiring for traders to take the long position on euro currency. Although on intraday charts there were some setups for trading, but even these setups were cancelled very fast yesterday on retail sales release. So you could see that sales were really great. It was positive, although markets were expected a contraction of the numbers. So the negative numbers. So although today we also will have the consumer sentiment, but on the background on recent retail sales, I suppose that sentiment also should be positive. Just because the consumers wouldn't buy lots of goods, that's shown by the retail sales if they will have negative sentiment. So what we could do currently in the situation that we have. So first of all, head and shoulders stands in a culmination point on a daily chart. As you could see, everything stands in the level where we will get either bullish action to the 120 area or even higher, or it will be failure and drop below the 1650. So with this current situation, again, we should recall the big ABCD target that we have, 1620. You probably could already forget about it, but I remind you, this A, B, C top D pattern with the target stands at 1620. This is the first moment. So we have uncompleted target right below the head and shoulders. Second moment, as we mentioned in the weekly report, we have bullish on the dollar index, grabber on the weekly chart, which is bearish for the euro currency, and this grabber suggests taking out of these lows. With the recent action on the dollar index that has increased, market starts moving in the direction of this grabber. So this grabber has not been erased, at least currently. And taking in general recent performance, so if you remember on the euro we also have got the grabber here. But you could see that on the dollar index, the grabber that we've got here was stronger than in euro, because market has followed in the direction of the dollar index and taking out those previous lows. So it means that maybe the dollar index patterns have the dominant role in relation to the euro currency, for example. Anyway, the weekly pattern is very significant. So another moment that not looks really good is the sell-off right to the bottom of the right arm. This is not good, and in general, bearish performance, bearish strength on the right arm, it's always not good thing for your head and shoulders. That makes it weaker, because the second part of the head and shoulders is usually the pattern, the side that should be controlled by the bulls. And then you sell off here, well, to put the shadow on upward perspective of the market. Anyway, whatever it will be, I think that currently we anyway should sit on the hands and wait what will happen. Because take a look on the 4 time frame chart, grabbers that have been formed here was cancelled immediately, very fast. That's why I said that if you still would like to try taking a long position based on these patterns, do not place stops too far. So hide it right below this area. Just minimize your risk, because in current situation, not necessary to place stops here, because if market will break it down, that was also support area if you remember. So it means that it will drop below it, because this is also kind of the hand shoulders, and failure, it means drop below this area. So it mostly the same, but it has significantly less risk. Now, everything stands, as I said, in the places. So currently you can see with this downward action, we've got the butterfly and agreement at the 1757 support. So this is COP, minimum extension, and 618, major 618 level. So if market is bullish, that support with the reversal pattern should be enough to reverse it back in upward direction. This is just common sense. But what is wrong here with the performance? First of all, as I said, this acceleration down, right to the COP, it means that market has very big chance to go to the OP target around 1707. The same story about the butterfly. When you see the acceleration to the 127 extension of the butterfly, it means that 1618 probably will be reached. 1618 stands somewhere between COP and the OP. But for us, it is actually no difference whether the market will drop to the 1618 of the butterfly or will go to the OP. Anyway, it will drop below the 618 level. And that will be very big challenge for failure of the hand and shoulders pattern. So market could reach the OP, show minor pullback to the OP and continue to the downside. So any performance that will be to the downside suggests that chances on the failure of the hand shoulders increasing. So currently, in the current moment, personally, I do not want to go long, because of all the stuff that I have described. This first moment. Besides, here we do not have yet clear bullish reversal pattern. Yes, we have on the hourly chart kind of the double ripple pattern here, but that is just a very minor reaction on the agreement support in the butterfly target. So we could get here this double ripple, market even could reach the 1785 area, retest these previous lows, but that may be just a short-term technical reaction on the strong support area. It's more interesting what will happen next. To get sure that market indeed reversing up from here, the pattern should be more extended. It should be, I don't know, maybe double bottom or head and shoulders as usual. So market should show that it indeed showing the reversal, forming reversal, and prepare for upward action. Currently, I do not see it. With the common consumer sentiment release and with the performance that I see here with a strong sell-off on retail sales, taking into consideration again the same stuff, grabber on the dollar index and in general weak sentiment on the euro currency, I would say that, well, in the current circumstances, I do not want to buy it, despite that market sense on the bottom that we were waiting for and watching what for the pattern on the daily chart. But the way how market is coming to this point where we were considering first taking the long position tells me that we need to get more confidence and we get more bullish context before taking the position. The things that we have here, just agreement support and potential shape of the hand and shoulders, well, it's not really not enough, I suppose, in the current situation. Well, that actually what we have currently on the euro currency. So let's keep watching what will happen by the end of today, this week, and make it a discussion in the weekend as usual, what we could do in the current situation and what the trading plan will be for the next week.